Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning. Welcome to Bazaar Morning Call. I'm Lata and with me are Anuj and Sonia, and we start a full week now and it starts very green. It does look like all the currency turmoil has been put back and it's green whether you look at Wall Street or whether you look at the Asian indices. Dollar index is sliding back to 96, so it looks like we have a good thing going. The rupee should find support at 70.10. It can't quite go back to the 69 because we have our own trade deficit data, but any further turmoil, all this talk about 71, 72, all that perhaps at the moment has been put to rest with the quiet in the global markets. I just want to put two things on the table. One is that this flurry of activity in retail, and if it does comes to be, as Mint points out, that Alibaba and Reliance Retail are going to tie up in a massive JV. And as other papers point out, that Amazon could be tying up, could be buying out more, then we have a huge retail competition. Basically, that's positive in the sense that there is going to be a lot of money coming in and people are looking at Indian consumption very strongly. So I see that as a vote for the Indian economy, though, like in telecom, when competition itself comes, the players in that sector can see a fall in margins. But it's a big vote of confidence on the Indian economy and the Indian consumption story from very deep-pocketed investors. The only area of concern for me would be those who are lending in Kerala. I mean, it would be the Federal Bank, Muthoot, Manappuram. All those companies, I would assume, would be the only ones sulking today. But I'm not very sure. It's quite possible that some kind of a munificence, forbearance comes from Reserve Bank or the government. But let's wait and see. For me, that is the only area where you could be troubled. The rest of the pack looks fairly positive today.
Okay, Lata, good morning. Anuj, morning. And some relief, right? I mean, the water has receded in Kerala now and, the red alert has been removed. So at least there's some relief to hear that this morning. Of course, rescue operations are on in full swing as well. But, just a couple of events to watch out for this week. You need to track the global events because China and US will hold trade talks tomorrow and day after. And the Dow was up almost 100 points on Friday in anticipation that before the $16 billion of tariffs come into effect, these trade talks will be held and some resolution may come through. So maybe, just maybe that could sort of, be one of the reasons why the markets could move up as well. Not just that, crude has been falling. NYMEX has posted its 7th straight weekly loss. Brent continues to be below $72 a barrel, which is positive for us. And this week, of course, it's a truncated week for us. We're off on 22nd because of Eid. But if you're looking at from a global standpoint, there's a Jackson Hole meeting at the end of this week where it's important to know what Jerome Powell talks about in terms of growth, etc., whether they're scaling back on, some of the targets in terms of the balance sheet reduction, etc. So all of that will be key to watch. But that's global. Locally, Anuj, morning, our market has not moved up in the last 2 weeks. I mean, it's less than 1% of a rally. You think this range-bound trade with a bit of an upward bias is something that could continue?
Morning, Sonia. I think you're looking at the wrong index now, the Nifty, that is.
I think the midcaps.
The broader market. And look, the market is set to open at fresh all-time high. The question is, do you buy Nifty at 11,500? I think that's a question that the market will answer, whether at 11,500, normally there is some profit taking. It could happen. But the point I'm trying to make here is that the current market rally is broad-based. This looks, you ask people, they are happier about this rally than they were. Last rally, people were feeling miserable because, their portfolios were not doing well. And look at what a remarkable thing has happened this month. If you would ask anyone that if in any month HDFC twins were down 5%, over 5%, and yet the market will be at new high, that didn't seem feasible at all. This month it's happened. The HDFC twins are down over 5%, and yet the market is at new high. And just take a look at what the sectoral indices have done this month. The midcap is up 3%, pharma is up 6%, IT is up 4%, FMCG is up 4%, metals is up 2%. There's only Nifty Auto which is down. Otherwise, every sectoral index has been in the green. So that way, this rally really has looked good. And on the index, we've had one step back, two steps forward. So let's see, 11,500, of course, will bring its own, issues, whether you buy there or not. For me, the trade today is about two stocks, Larsen & Toubro and Infosys. If we're talking about index, Larsen & Toubro, of course, will react to buyback. It's a stock which has underperformed. And it's the numbers were good, and in general, you'd want to believe that the stock will rally. And Infosys, the CFO exit news, it's remarkable it's happened today, because 1 year back, yesterday was the day that Vishal Sikka had quit Infosys. Stock was at 890. Now the stock's at 1400. So, in general, you tend to buy good companies, great companies at bad times. Of course, today there would be an issue because the stock is very close to its highs, and generally there would be some downgrades, etc., whatever. But the short point here is that if it gaps down and you want to sell there, you're taking a bit of a risk.
Okay, you think it has an upward bias?
I mean, look, the chart of the stock is telling us that, frankly, it doesn't care whether the CFO goes or not. It's a business which got its tailwind in terms of dollar rupee, in terms of the weights, perhaps mended its business or whatever, and global trends. I mean, just look at that chart. I mean, it's just one way upward, and a CFO exiting will not disturb that kind of move on the stock.
No, more generally, I think a rupee depreciation is always positive for the economy. When it is happening, it seems like chaos. But after the depreciation, it helps metal companies because imports are expensive, so they're able to get some elbow room in pricing. Just any company which has import competition does better. Yeah. So, in a sense, today we could see the positive of, or maybe we already saw that on Friday.
Yes, and for Infosys, I mean, it's not the first time this has happened, right? They've lost CFOs so many times in the past, Rajiv Bansal, Mohan Das Pai, etc. And the stock has actually recovered quite a bit. Of course, a knee-jerk reaction is something that the street is looking at. But ever since Salil Parekh became the CEO in Jan, the attrition levels have gone up. So this is something that investors are perhaps used to at this point in time. Of course, it'll be the stock of the day, one of the stocks of the day. So we'll discuss that in greater detail. But for now, let's take a look at what our wise experts have to say as we kickstart this trading week. Neelkanth Mishra of Credit Suisse says currently consensus expects FY20 Nifty EPS to grow 24% on top of a 31% growth in FY19. He says half of the 57% increase in EPS from FY18 to 20 comes from banks. He also says energy, consumer discretionaries and materials add another third to the increase. Neelkanth adds headline growth estimates seem high but can be supported by upgrades to IT and metals as the dollar INR assumptions move from 65-67 to 70, offsetting some regular cuts. He says their preference remains for less expensive stocks like SBI, ICICI Bank, Tata Steel and L&T.
Well, actually, the banking stocks should be watched this week. Today is hopefully the judgment in the Allahabad High Court. And if there is a stay or something, then the banks could immediately see an advantage. But the bigger one is that the SR judgment at the NCLAT, whether Arcelor is a conflicted party or whether a new metal is an ineligible party is what is going to be decided. Either which way, if one of them is allowed, the minimum that people are talking about, or rather, New Metal has said it is bidding for, is 37,000 crores for SR. So no matter who is considered eligible or ineligible, the banks are walking away with 37,000 crore this year, or maybe even this quarter itself, when the NCLAT judgment comes. So that's another very important judgment. Two big ones for banks today and this week. Okay, more equity advice coming your way. Bharat Iyer of JP Morgan says they started calendar 18 forecasting a high volatility and low return year for Indian equities with a base case Nifty target of 11,300. He says subsequent to the surge over the last 2 months, the market is currently trading at their fair value target. He remains constructive and target returns of about 10% 1 year forward, but expects volatility to resume into Q4 calendar 2018. Bharat says their return targets are premised off a moderate recovery in earnings, even as valuations normalize gradually. Says to note that broad market valuations have derated by 5% to 18.6 times 1 year forward consensus earnings. So again, I think a positive cue on broad market valuations.
Okay, well, let's find out what's happening in the money markets. Of course, we hit that record low of 69.13 that we saw on Friday. Let's just get the final rupee rate up for you. Pramit Brahmabat of Veracity says after a massive depreciation, the rupee may take a breather here at this level, considering the immediate support of 70.20. He expects the dollar INR to trade with a positive bias in a range of 69.80 to 70.20 for the trading day.
Okay, so positive on the currency. Ajay Manglunia of Edelweiss says the focus will be on currency this week in the bond markets as well, and bond markets will hope for a favourable impact as the global tremors from last week stabilise. He says if the rupee pulls back and stays within 70 mark versus the dollar, gilts will also erase some of the losses, especially with the softening of the bias in crude prices. He expects the 10-year benchmark bond yield to trade in a range of 7.82 to 7.88 for the day. Actually, what Ajay Manglunia is saying is something which we didn't discuss. Crude is at 71. We didn't react so much last week because, you know, there was currency turmoil. But now with the turmoil settling and crude still with 71 point change, I think that's yet another tailwind for India.
Oh, yes, it is. And, of course, on Friday, perhaps you could argue that market was looking at that view also because, of course, the money market was short on Friday. But anyway, let's talk about global markets. Here's Mangalam with the world view.
Well, there's a lot of positive news coming in from the globe. So the US Wall Street Dow posted a triple-digit gain on hopes of a trade truce. In fact, reports suggested that sometime in November, Donald Trump and Premier Xi are likely to meet to discuss trade. And that is bringing some hope. Along with that, we saw some gains come by on the S&P 500 as well as NASDAQ as well. So most of the Wall Street indices ending in the green. The same can't be said for the European indices, which were still under pressure owing to the Turkey uncertainty. There was some money which was pulled out of emerging markets. However, the Asian markets, they are throwing caution to that wind. Most of the Asian indices are in the green, barring the Nikkei, which is falling on account of an easing dollar index, which means a strengthening yen, not too good for their exporters out there. The SGX Nifty, that one indicates a record open above that 11,500 mark. So cues of positivity.
Okay, cues of positivity. Thanks so much for that, Mangalam. We'll take a short break on that note. On the other side of the break, we'll come back with CNBCTV18's top 10 list of stocks to watch. Hi, welcome back to Bazaar Morning Call. This morning, the Asian markets are looking quite good, actually. The SGX Nifty is up in the green. Most markets are trading in the green. Remember, work is on to de-escalate the trade tensions between the two countries, that's China and the US. And a 9-member delegation from Beijing will hold meetings with the US officials this week itself. And in anticipation of that, most markets, Shanghai is up almost about 0.5 to 1% as well. Our research team, though, is here to tell you about the list of stocks to watch as we head into trade this morning. Lots of stocks to talk about. So let's start very quickly. Anuj, what are you looking at?
So, Sonia, I'm repeating my stock on Friday. Tata Motors, big jump in delivery buying on Friday. Unexpected lines, perhaps, because it's shown a counter-trend move, which is now possible to see a move towards the 50-day moving average, having taken out the 20-day moving average. Overall trend is weak and remains weak, but it's a tradable rally, and which is perhaps having some more legs. The other is ITC. It's a fresh 52-week high and 500 crores of delivery buying on Friday. It's showing signs of leadership after 1-year hiatus. In fact, it's led this FMCG rally, and it looks like perhaps there could be some more buying. Of course, valuation-wise, we know it's perhaps among the cheaper stocks in the FMCG basket, so that could be in its favor as well.
Okay, thanks a lot for that. Anisha, I think the other big stock that I knew Anuj referred to already, L&T buyback news?
Oh, well, yes, L&T can, consider first buyback proposal on August 23rd when the board meets. Remember, as per the latest consolidated financials that the company had put up, they have a cash and bank balance of around 8,000 odd crores and an additional investments of around 9,500 odd crores. And the net worth at the end of March 18 was close to around 61,000 crores, giving you an indication that the buyback size can be anywhere between 500 to 700 odd crores. And this is what Macquarie also says. They are looking at a buyback size of 0.7 to $1 billion. Now, they also say that the move is ROE positive, as well as they're not very concerned about the cash flows or the working capital situation, given the fact that the company has got enough cash flows from the electronics and automation segment deal that they had done. So overall, a positive move, and they believe that this could keep the prices higher in the near term. Back to you.
Okay, Anisha, thanks a lot for that. Well, one of the stocks of this year has been Infosys, up 40% this year. Today, of course, Reema will react to the news of CFO quitting.
Yes, Anuj, absolutely. So this is a setback for Infosys because the CFO, MD Ranganath, who's been with the company for the last 18 years, has stepped down. He will continue to stay on in his position as a CFO till the 16th of November. But this is a negative for the company. It marks the 4th high-profile exit since the CEO, Salil Parekh, took over as the CEO of the company in January January of 2018. A big problem for the company has been the escalating attrition. Attrition is at an all-time high of 23% as of June 2018, and it compares with only a 10.9% attrition that TCS had in the quarter gone by. So this exit once again raises questions about the leadership stability. Adding to the problems is the fact that the company's growth is lagging peers. So for this year, the company is given a guidance of 6 to 8% in terms of a constant currency revenue growth for FY19. While TCS does not give a guidance, the expectation is the company could see a 10, maybe even a little higher in terms of growth. Now, the stock, as you rightly pointed out, has done well, a near 40% rally so far in 2018. It's underperformed at TCS, but it's outperformed the market. So Morgan Stanley has downgraded the stock because now the risk reward is neutral. So they've downgraded the stock, while JP Morgan says TCS's valuation premium may expand over Infosys. They call it a safety premium. Back to you.
Okay, Rima, thanks a lot for that. If you go by the trading history, every high-profile exit has been a great buying opportunity for Infosys investors. Let's see if this time it turns out to be the same. But there's been so much damage in Kerala because of the flooding. We're just discussing a couple of the companies that could see a near-term impact because of this. Lata, what's on your list?
Well, that's all I have to say. The NBFC companies and Federal Bank, perhaps, they're all Kerala-based lenders, so maybe there could be a bit of a reaction. We already saw that in Federal Bank in particular. On Friday, the stock fell 3%. But I would still, not be too negative on these stocks, because it's quite possible that in times like this, there is a special dispensation that could come from the Reserve Bank or the government. We have to just wait and see, but there could be an initial knee-jerk reaction.
Okay, an initial knee-jerk reaction. We'll keep an eye out on that, Federal Bank, Muthoot, etc. But crude, NYMEX crude has posted its 7th straight weekly loss in the week gone by. Manisha is here to tell us the latest over there. Manisha?
Thank you so much for that, Sonia. Yes, it has been a string of losses that when we have seen the crude varieties. As you rightly pointed out, the U.S. crude has been falling for 7 weeks now, and the Brent crude has been falling for 3 weeks as well. And we have seen 0.25% of a decline in the Asian markets right now. There have been concerns now for some time over the slowing economic growth. We have seen those warnings come in from IMF, from the OPEC monthly report, and the EIA data as well. If you look at the Chinese data, those numbers have been disappointing, right from industrial numbers to investments to crude imports as well, which have been declining for 3 months now. And the Turkey concerns continue to weigh onto the market on the kind of impact that this would have. The Iran sanctions is yet another thing to watch out for. So while this is good news for the Indian OMCs companies and Indian economy as a whole, you might still be looking at further decline in the crude oil prices in the days to come.
Okay, you bring good news to at least the equity bulls, Manisha, even if it is bad news for the crude oil bulls. Okay, retail companies, we discussed that there's severe competition coming up. Mangalam, tell us all the new news that's brewing here.
Well, it's on the front pages of most newspapers, Lata. So there are reports that Alibaba may invest about $5 billion in Reliance Retail, and they're looking to pick up 50% stake for $5 to $6 billion in Reliance Retail. That is the number that I'll take a bit of take with a bit of a pinch of salt, because brokerages value Reliance Retail anywhere between $15 to $25 billion. So the short point is that them looking to pick up stake in Reliance Retail. Along with that, there's a report that Amazon, Samara, all of them are looking to buy Aditya Birla's more. In the near term, this means increased competitive intensity, but in the long term, it just means that the Indian consumer story is well and truly on.
No, but is there any impact on Reliance itself with respect to Alibaba's valuation of retail?
Yes, but then we need to know how much of this is, actually happening, because $5 billion for 50% of Reliance Retail is much lower than what the brokerages are ascribing to Reliance Retail itself. Remember, last year they did revenues of about 80,000 crores. The first quarter this year they did revenues of about 26,000 crores. Most of the brokerages estimate next year's revenue to be anywhere between 1.5 to 2 lakh crores. So that is the sort of valuation that they're giving to Reliance Retail itself. So $5 billion for 50% is a little less.
Okay, and Reliance Retail is going big even in the online space. They've now started selling smartphones, electric appliances in their digital platform as well. That is the next leg of growth, it seems. But standard disclaimer, of course, Reliance Industries owns Reliance Retail, which owns the channel that you're watching. Let's go across now to Sonal to find out some stocks that are in the news or could be in the news this morning. Sonal, over to you.
Good morning, Sonia. Well, Rain Industries will be in focus because there has been a recent notification that prohibits import of green petroleum coke into India India, and the company says that it might impact the operations of its wholly owned subsidiary that supplies calcined petroleum coke. Also, the company has filed an application with the Supreme Court to seek clarification regarding the imports of green petroleum coke, as it is used as a feedstock for calcined petroleum coke. Ratnamani Metals will also be in focus because the company has bagged an order worth rupees 155 crores for supply of CS pipes. Goa Carbon will also be in focus because the company has shut one of its Goa plants, and now the production has resumed in the company from 18th of August. This stock will be in focus as well. Back to you.
Okay, so let's do a quick recap then of our top stocks to watch. Stocks with positive news flow: Tata Motors, ITC, L&T, you have Ratnamani Metals and Goa Carbon. While stocks that have negative news flow today: Infosys, Federal Bank, Manappuram, Muthoot Finance, Rain Industries, Reliance, Future Retail, Shoppers Stop and D-Mart. But the stock to focus on this morning could be Infosys, and what could be a big setback for Infosys. There's been another big management exit, as we all know. The CFO, MD Ranganath, has resigned, citing personal reasons. Apurva Prasad, the research analyst at HDFC Securities, joins us on the phone line. Apurva, hi, good morning. If you go by what's happened in the past, many of these high-profile exits have been a great buying opportunity for investors. Do you think this time could be the same, or given the fact that the stock has rallied so much, we could see a near-term pressure here?
Sure. So I think it's definitely, as you said, it's a negative development. Let's roll back, to what's happened, over the last year. If you see, a large part of the rally can really be attributed to stability post the transition that was really happening, or that happened a year back, plus the capital allocation which they continued with. So I think these two were, pretty much large determinants, of the company's performance. And let me just also add the USD INR, how that's really played out. So having said that, I think, yes, it does sort of question the stability, at least in the near term. But we also must realize one thing, that, that a lot of it is, completely institutionalized. So while this would be a near-term setback, I think a lot of processes are in place. However, I think relative metrics will tend to become more and more important, because, you have a peer which is probably at half the attrition, even if it's company-wide. So I think that's
So basically, are you reducing your price target at all? I mean, it's difficult to believe that high-profile exits won't have any impact, especially when they are so frequent. So you reduce your price target at all?
No, so we maintain our multiple of 18 times. It's nearly fairly valued right now, but I think correction to a larger extent may become an opportunity. But at where it is, at current levels, I think it's nearly fairly valued.
Okay. Apurva, good morning. So, I mean, from your point of view, this TCS versus Infosys, this year, of course, both have rallied almost same amount. But in terms of valuation premium, you reckon TCS could command a bit more from now?
Yeah, I think so. I mean, Infosys is about 20% discount currently. I think, we have a 25% discount that we are valuing. So we value Infosys at 18 times and TCS at 24 times on FY20. I think that will definitely hold on, for a variety of reasons. Fact being that even if you look at the earnings growth performance, it's probably 1.4x the pace of Infosys, I think. Leave all else, and the stability part and the attrition part, and the overall execution part. So I think that premium is likely to continue and probably even expand.
Has the past history suggested that growth has been impacted post these, high-profile resignations? Because that's the only concern that the street has now with respect to Infosys, right? That growth is lagging its peers like TCS. You think with this high-profile resignation, things could get worse on the growth front, or has it not impacted in the past?
Not really. So I think it's more of, growth impact. If it all can be attributed, it's probably been more in the case of, more vertical head transitions or CEO transitions, not really in the case of CFOs. Having said that, a lot of these CFOs have been internal candidates in the past, So we need to see how that transition also happens going forward. In the past, as I said, there's all been internal candidates for the CFO. So that's another thing, but not really. I don't see a very significant business impact. I think, as I said, a lot of policies are institutionalized, so I don't see really a risk to the capital allocation policy that was laid out earlier.
Okay, take your point, Apurva. It's not a vertical head, it's a CFO, and to that extent, maybe the actual working of the company won't be hit. But yeah, we will have to wait and see. Apurva himself thinks that the stock is fully valued at current levels. Thank you very much for joining us with your thoughts. We have to take a quick break, and thereafter, of course, we will have our technical experts join us to tell us whether new heights are waiting for all the indices.